Welcome to Financial Freedom FX. In today's video, we're diving deep into the Bitcoin to US dollar chart on the monthly time frame. And trust me, this analysis reveals some powerful insights about where BTC could be headed next. So stay with me till the end. This breakdown will not only explain the current price action, but also highlight key support, resistance, and smart money behavior in play. Let's start by observing the current price. As of August 2nd, 2025, Bitcoin is trading around $113,807. On this monthly chart, each candlestick represents 1 month of price action, and the story unfolding here is impressive. Over the last several months, Bitcoin has formed a strong, bullish trend, marked clearly by a series of higher highs and higher lows, indicating consistent upward momentum. This pattern is a classic hallmark of a long-term bullish market structure. Zooming into recent candles, July 2025 printed a very strong bullish candle that broke above a key resistance zone marked between $109,000 and $114,000. This zone had previously acted as a ceiling where price struggled to break through. But in July, BTC not only broke above this level, it closed above it, which is a critical sign of breakout confirmation. That move showed strong buying interest and suggested that institutions may have stepped in with significant volume. This breakout was no accident. If you look at the previous candles, especially from May and June 2025, you'll notice a solid bullish engulfing pattern followed by a continuation candle. These are textbook bullish signals, often seen at the start of major uptrends. These candles essentially laid the foundation for July's breakout, showing how buyers gradually gained strength over time. Now, let's talk about the current candle, August 2025. This candle is still forming and has so far printed a small, red body, indicating a minor pullback or hesitation after the big move up. It's important to note the upper wick on this candle. It suggests price reached a high of around $116,000, but sellers pushed it back down, creating a short-term rejection. This area around $116,000 to $123,000 is now acting as resistance, at least temporarily. But here's the interesting part. Although we're seeing a small red candle now, price is still holding above the breakout zone, which is now functioning as a support area. In trading, when price breaks through a strong resistance and stays above it, that level often flips to become support. And that's exactly what's happening here with the 109K to 114K zone. Now below this, there's another major support area you can't ignore, the $75,000 to $78,000 zone. This area was previously tested during Bitcoin's retracements earlier in 2025. Candles from March and April wicked into this zone but closed well above, indicating strong demand and heavy buying pressure. This makes it a powerful demand zone. If price ever revisits it, we can expect serious interest from institutional players. Looking at the full structure, Bitcoin remains in a bullish market phase. It has broken key resistance levels, flipped them into support, and is now consolidating above. This is classic price discovery behavior, meaning the market is exploring higher and previously uncharted levels. If Bitcoin stays above the 109K support and closes strong this month, we could see the next wave push BTC towards $130,000 or even $135,000. However, traders should also be aware of the other possibility. If price fails to hold above this 109K support, especially if the August candle closes below it, we might see a deeper retracement back into that zone or even down to 77K, where the last major accumulation happened. But as long as the higher highs and higher lows structure holds, the overall bullish outlook remains intact. From a psychological level, the $100,000 mark has already been decisively broken and held, showing that retail and institutional traders are no longer afraid of these big numbers. Meanwhile, the 120K to 125K region may serve as a short-term profit-taking zone, which is why we're seeing rejection wicks in that area. Smart money may be inducing liquidity here before making the next move. To sum it all up, Bitcoin is in a strong uptrend on the monthly chart. We've seen a clean breakout above 109K, a test of new highs near 123K, and a mild pullback that may just be setting the stage for the next leg higher. Key zones to watch are 109K for support and 123K as short-term resistance. If momentum continues, the next destination could be 130K and beyond. Now that we've understood the bigger picture from the monthly time frame, let's zoom into the weekly chart, where things get even more precise. The weekly time frame is incredibly useful for identifying swing trading opportunities, retests, and short-term rejection zones, and what we're seeing here is a textbook structure unfolding. As of now, Bitcoin is trading around $113,923, and we can clearly observe that the price recently broke above a major weekly resistance zone between $109,000 and $114,000. This same zone we saw on the monthly time frame was even more reactive on the weekly level. In the past, BTC tapped into this range multiple times but failed to break and close above. However, during the final weeks of June and into early July 2025, Bitcoin printed a powerful bullish candle that decisively closed above this resistance. That move marked a strong breakout backed by clear volume momentum. But here's where it gets interesting. Following that breakout, the last two weekly candles have been bearish, both showing signs of rejection from the $120,000 to $123,000 range. This upper zone has now formed a short-term resistance barrier, as seen by the long upper wicks on both red candles. These wicks represent profit-taking and potential smart money liquidity grabs at higher levels. Still, this pullback is not a sign of weakness just yet. In fact, price is currently retesting the same zone it broke out from, the 109K, 114K region. In technical analysis, this is referred to as the break and retest pattern, where a former resistance gets tested as new support. As long as BTC stays above this zone on the weekly time frame, the breakout remains valid, and bulls still have the upper hand. Looking at the broader trend, Bitcoin remains in a strong uptrend. The price structure is perfectly aligned with higher highs and higher lows since November 2024, when BTC launched its rally from the $77,000, $78,000 demand zone. That area still acts as a major institutional accumulation zone, and so far the price hasn't even come close to retesting it. This shows that buyers are stepping in at much higher levels, signaling growing confidence in the market. Technically, the most recent breakout candle in June was followed by a strong continuation, but the current bearish weekly candles could simply be part of a healthy retracement. Markets move in waves, impulse, correction, and continuation, and what we are witnessing now may be that correction phase. However, we must be cautious. If the current weekly candle or the next one closes below $109,000, the structure would shift and open the door for a larger pullback, possibly toward the 95K or even 77K level. From a candlestick perspective, we don't yet see a complete reversal pattern like a bearish engulfing or evening star, but we do see rejection candles, signaling short-term indecision. If the next weekly candle forms a strong bullish body and closes above $116,000, it would invalidate this short-term bearishness and indicate that Bitcoin is ready for its next upward leg, potentially pushing back toward $125,000 or even $130,000 to sum up the weekly picture. Bitcoin is at a critical inflection point. It's either going to bounce strongly from the retest of the 109K, 114K zone and continue upward, or if sellers gain control, we might see a deeper correction. The key level to watch is 109K, as long as BTC holds above it on the weekly. Close, the bullish structure is valid. A break below, however, could trigger a shift in momentum. Now let's break it down even further by moving into the daily time frame, where things start to get granular and where short-term trading decisions are made. This is the time frame where intraday traders and swing traders keep their eyes glued to every move. And right now, Bitcoin is showing some very interesting behavior. On the daily chart, Bitcoin is trading around $113,938, and here we can see in high detail how the market reacted to that key $109,000 to $114,000 zone. Just like on the weekly and monthly charts, this level has been absolutely critical. But here on the daily, it becomes even clearer how price action has respected this zone repeatedly as both resistance and support. Zooming into recent price action, you'll notice that after the breakout above 114K, price pushed aggressively into the 120K plus region, forming a sharp bullish move with minimal retracement. This strong impulse was fast and aggressive, a sign of institutional activity, or short squeezes. But after hitting a high near 123K, Bitcoin began to show signs of exhaustion. Over the last several daily candles, we've seen a steady pullback, and now price is back down near the same 114K zone, right where the breakout originally happened. This current drop is not necessarily bearish. In fact, if you look closely, BTC appears to be in the middle of a retest, tapping back into the previous resistance zone to confirm it as support. So far, today's candle is green, and buyers are trying to hold the level. If this daily candle closes bullish, it could serve as confirmation that the level is holding and price may be ready for a bounce. Below the 114K zone, there's another interesting level that was respected several times in June, around 102K, 105K. You can see on the chart that price dipped into this area multiple times before surging higher. This zone acted as a short-term accumulation range before the breakout, and it remains valid as a secondary support level if BTC breaks below 109K again. Also, let's not forget the major demand zone down at 77K, which we identified earlier, on the monthly and weekly charts. While it's far away from current price action, that zone still marks the origin of the current uptrend and is likely to remain protected by long-term investors and institutions. If Bitcoin ever returns to that level, it would likely be a high-probability buying zone. But for now, all eyes are on the 109K to 114K zone. From a price action standpoint, we're seeing lower highs forming during this pullback, but they haven't yet broken structure. The higher low is still intact, meaning the market is technically bullish as long as price does not break below 109K on a closing basis. We're in the classic range of pullback versus reversal, and how price reacts over the next couple of days will likely decide the short-term trend. As for candlestick patterns, we haven't seen a strong reversal pattern yet, but we are starting to see signs of demand around this level. If tomorrow's candle prints a bullish engulfing or a morning star setup, that would be a strong signal for a possible continuation move. On the flip side, if price prints a bearish engulfing and closes below 109K, it could trigger a sharper correction back toward the 102K or 100K region. Now let's bring it all together by zooming into the H4 chart, where we can see intraday market structure, short-term liquidity movements, and precise price reactions. This is where traders execute entries and exits with accuracy, and the current setup on this 4-hour chart is a gold mine for understanding short-term market behavior. As of now, Bitcoin is trading around 113,192, and what's immediately visible on this chart is the clear drop from the recent highs near 123K, a decline. That began just days ago. On the H4 timeframe, this move down looks more intense, and the price is approaching a key demand zone between $109,000 and $114,000, which has been clearly respected across all higher timeframes. What's fascinating here is how liquidity and structure align. Before the breakout in mid-July, BTC spent weeks consolidating within this very zone, and now price is retesting it from above. This type of move is known as a bullish retest or break and retest setup. And if price shows a strong bullish reaction, here it could signal the beginning of another leg to the upside. Looking at market structure, BTC made a clean impulse move up in July, forming a higher high at 123K. Since then, we've entered a correction phase, where lower highs and lower lows are starting to form, but so far this looks more like a retracement than a reversal. Unless we get a breakdown below the 109K support, the overall structure remains bullish even on H4. Now focus on the internal levels. There's a minor support zone between $101,000 and $105,000, which served as a strong short-term accumulation block back in late June. If price fails to hold the current 113K, 114K area, this is the next level where buyers might step back in. And further below, we again see the strong institutional zone between 77K and 78K, which is the absolute last line of defense for bulls. Candlestick behavior on this chart is also revealing. We're seeing long wicks to the downside during this pullback. That's often a sign of liquidity grabs or smart money traps, where the market pushes price lower to trigger retail stop losses before reversing upward. These fake-outs are common in SMC and ICT-based strategies, and traders should be cautious not to panic sell into these traps. So what's the game plan here? If Bitcoin holds the 113K, 114K level and forms a bullish engulfing or strong continuation candle on H4, it could trigger a bounce back toward 120K, possibly retesting 123K highs. On the flip side, if price cleanly breaks below 109K with volume, we could see a slide into 105K or even 100K in the short term. To wrap up this analysis, from the monthly to the H4 chart, Bitcoin is in a strong macro uptrend, but is currently undergoing a healthy correction. The 109K, 114K zone is the most important level to watch across all time frames. Hold it, and bulls remain in control. Lose it, and we may see deeper retracement. But for now, structure remains intact, and buyers are showing up near key zones. Thanks for watching this complete multi-time frame breakdown on Bitcoin. If you gained value from this video, make sure to smash the like button and leave a comment below telling us your short-term and long-term BTC targets. Are you buying this dip or waiting for lower levels? And don't forget to subscribe to Financial Freedom FX, where we simplify technical analysis and smart money concepts to help you trade like the pros. New videos drop every week covering live price action, chart patterns, and proven trading strategies. Until next time, stay smart, stay disciplined, and trade with confidence.